Welcome to ForexTV.com's PM Exchange. It's Tuesday, February 25th. I'm Remy Hoki. Today I'm joined by Peter Wadkins, Senior FX Analyst at Thomson Financial. Good afternoon, Peter.
Hi, Remy. How are you?
Good, thanks. Thanks for coming on the show today.
Thanks for having me back.
Well, it's only Tuesday, but we have a lot going on today. So first and foremost, I want to touch on the inflationary data we got from today and the pressures here we're seeing in relation to the slowdown in growth. Right. And as a result, we're seeing the US dollar weaken against the major currencies. But where do you expect the Fed to go, and where does the economy stand right now?
Well, it's an interesting question. There are a lot of analysts who feel that we are in a recession, that there's no question about it, but there are still official forecasts which state that we are looking at very low growth, but not negative growth. And even if we do get negative growth, they think that we're going to get a positive second quarter, so technically it wouldn't be a recession. However, obviously, there's the old expression, a growth recession, which is when you have inflation that eats up any of the economic output because of the fact that economic output is so slow and the inflation rate is higher than that. And that then means that you do not get the job growth that you require to keep things, to get things moving again.
Well, now that we've highlighted some of the fundamentals here in the U.S., let's move on to price action for the major currency pairs, starting out with euro-dollar. In today's session, we saw the pair hit a high of 1.4923. So if you could tell us what key levels you'll be watching for the pair.
Well, the big level that everybody's looking at is 149.65 or 67. People round it down to 65 because that's what technicians tend to do, but the actual top was 149.67 last November. That is the key area that everybody's going to be looking at. If we break above that, then everybody will be looking for 150. There are option barriers at 150 to figure, which are meant to be absolutely huge. There will be strong option defenses ahead of it. So I wouldn't think it would go there easily, but if you do get that break of 149.75, the spec community are going to be chomping at the bit to make it happen.
Well, let's move on to the UK currency, which has also seen strength against the US dollar as well as the euro in today's session. But going forward, are you bullish on the currency, and what strategies do you suggest for the sterling?
Still bearish, I'm afraid. It may sound unpatriotic being an Englishman, but it really overran its course when it went up to 210 last year. There's strong interest to sell ahead of 200. A lot of the reason we're seeing it go through this afternoon, the market's extremely thin, and sterling in the New York market in the afternoons is very thin. So you tend to see exacerbated price movement. We would suggest selling into a rally ahead of 200 and possibly layering into some option strategies that would cover a break above.
Okay, now that we've covered the euro and sterling, let's move on to the Japanese currency. U.S. equities are up in afternoon trade, but we haven't necessarily seen a rally in dollar-yen on this dollar-negative day. So if you could give us your assessment of what we're seeing in dollar-yen as well as your the yen crosses and your forecast.
Well, it's quite an enigma for yen to be as strong as it is in the wake of 1% U.S. equity rally. Normally, you'd expect to see euro yen moving up and that pressure in dollar yen up and the whole 9 yards. It's not happening today. The yen is still strong, and I think what's going on is that because of those U.S. consumer numbers we saw this morning, people are wondering whether or not this equity market move up is real or not. And I think you mentioned it before the show that who knows where we're going to close. How often do we see it give up all of its gains in the last hour? So I think a lot of it is the fact that the equity markets are rallying on hopes of further Fed cuts and IBM earnings. Is that enough to keep equities moving higher? And I think there's enough doubts about that that's why the yen's not moving with it.
Okay, and I want to shift our focus over to the dollar block currencies. As we see the U.S. dollar weaken against the majors, the U.S. dollar has touched significant lows against Aussie, Kiwi, and CAD on the day. So if you could briefly touch on your fundamental as well as technical outlook for the dollar block currencies.
Sure. Let's start with Aussie because it's still out of the three, the best in a fundamental shape. Growth in Australia is still very strong. The RBA are still on a tightening tack while most of the rest of the world are either on hold or easing. So Aussie is still the currency for all season. You buy it because it's a commodity currency, you buy it because of interest rate yield, you buy it just because you buy it. So Aussie looks like it still wants to press higher. It was one of our favourites last time I came to see you. We could see the test of 94 cents again, which was where it peaked out last year. Canada, which unfortunately I have to write every day, has been very strange. We went up to 101 3/4 last Friday on a day that it should have gone the other way, and then collapsed to 98.20 today before I left. It seems that the market's changed its mind. They're looking at 101 oil, they're looking at gold still firm, and they're saying that Canada should be stronger. But the main driver is that CAD has been very beta-driven recently, and it has been following moves in the US equity market. I think that if we do see the equity market give up its gains, the CAD will suffer, and that's something to watch out for. Kiwi's going to get dragged along on the tails of Aussie, and the fact that agricultural prices are still very firm, and Kiwi or New Zealand being a major producer of agricultural products, that's what's going to sustain that. Plus the interest differentials.
Okay, now that we've covered all the major currency pairs and you've given us your outlook as well as forecast, looking ahead at the rest of the week, it is only Tuesday and we have plenty of data coming out here in the U.S. And we also do have Bernanke speaking tomorrow as well as Thursday, and I'm sure the markets will be paying attention to that. But at this moment in time, if you could tell us what Forex traders need to keep their eyes on and what event risks they need to watch out for.
Well, I think the key is to everything are going to be data-driven. If we continue to see soft US data, the likelihood is that the Fed comments are going to get more and more dovish, and people will be building in larger and larger US interest rate cut forecasts, which is just going to press the top side of euro dollar and put the dollar under pressure against currencies like the Swiss. I don't think there's one particular event we've got this week that's coming up. It's going to be more a reflection of the sum of the whole parts. Where is the picture going to develop to by the end of the week?
Okay, Peter, thank you very much for insight and analysis, and thank you very much for coming back.
Oh, you're very welcome. Thank you.
This has been your Forex News with Peter Wadkins from Thomson Financial. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended with strong gains for the second straight session. Wall Street cheered IBM's approval of a $15 billion stock buyback. Earlier today, U.S. data disappointed the market, showing that the U.S. economy is weakening while costs continue to rise. Earlier today, the Labor Department reported that PPI jumped 1% in January. The core rate, ex food and energy prices, rose 0.4%. Meanwhile, the Conference Board's Consumer Confidence Index fell to the lowest since February of 2003. The index tumbled to 75 in February from a revised 87.3 in January. And the S&P's Case-Shiller Home Price Index tumbled 8.9% in the final quarter of 2007. That's the indicator's sharpest decline in its 20-year history. The monthly index of home prices fell 9.1% in December from the year earlier level. At the closing bell, the Dow Jones Industrial Average gained 114.70 or 0.91% to close at 12,684.92. The tech-heavy Nasdaq added 17.51 points or 0.75% to end at 2,344.99. And the S&P 500 advanced 9.49 points or 0.69% to close at 1381.29. In the fixed income market, U.S. long-term Treasury bonds declined after the latest wholesale price report and also over concerns about climbing energy prices. There was a sell-off in the 30-year note, sending its yield up to 4.68% from 4.67% at the end of the previous session. Meanwhile, the 2-year note rose with its yield down at 2.03% from 2.12% late Monday. And the 10-year benchmark note gained with its yield at 3.86%, down from the 3.91% late in the previous session. Taking a look at energy, NYMEX crude oil futures soared to close at a new record high. Although U.S. data disappointed, the stock market rallied and inventories remained in focus. The front-month crude contract hit a high of 101.15 on the day. April crude added $1.65 to close at $100.88 a barrel on the NYMEX. In other petroleum products, heating oil futures gained 2.97 cents to close at $2.8150 a gallon. Earlier, the contract hit a new record high at $2.8188 a gallon. Gasoline futures rose 0.8 cents to end the session at $2.5505 a gallon. Meanwhile, the front-month nat gas contract rose 2 cents, ending the session at $9.206 per million BTU. Over in the metals complex, gold futures pared back losses and gained on the day. The U.S. dollar weakened across the board, hitting a record low against the euro. April gold added $8.40 to end at $940.50 an ounce on the COMEX division of the NYMEX. Yesterday, gold futures ended lower, following comments by a Treasury official who said the proposed partial sale of IMF gold reserves is supported by the U.S. And in other metals, March silver soared 63.5 cents, ending the session at $18.72 an ounce. Earlier, it hit a high of $18.74. March copper fell 5 cents, ending today's session at $3.74 a pound. This afternoon, we're joined by Paul Britton, analyst at Aileron Trading. He'll recap today's session in energy and metals and also give us his commodities outlook.
Hi, good afternoon. This is Paul Britton with Aileron Trading out here in Las Vegas, Nevada. All right, today in the energy markets, we actually had the crude oil prices starting out on a quiet note this morning, actually trading lower right after the open. Then all of a sudden, the market started getting rumors of another big storm heading in to the northeast, which is still digging its way out after last weekend's storm. Forecast of they had the original forecast of 3 to 4 inches, ended up to 10 to 12 inches in some places. Kind of caught everybody off guard. But anyway, so this is what, so the energy traders started buying up the market based on this big storm heading into the northeast. However, what I think, looking at the market and watching this whole thing, what we're looking at in crude oil is that the market's up $1.67 in face of tomorrow's inventory reports, which are expected to be bearish. Everybody knows it. The storm, we haven't seen storms push around the market like this ever. And what we're looking at, though, is I think that crude oil traders are eyeing the stock market and keeping an eye on, what effect is crude oil prices actually having over the stock market. If you guys remember when the stock market started crashing right after Martin Luther King Day, crude oil prices dropped precipitously. In fact, all commodities across the board had limit down days, etc., because everybody was afraid that these higher prices were killing the economy. Now, the economy seems to be shrugging everything off. We've got the S&P up for a second day in a row. The Dow Jones is up triple digits, second time in a row. So it seems to be shrugging off higher energy prices, higher grain prices, higher everything, while the dollar is falling precipitously again. So I think it's kind of like in my opinion, I might be totally wrong, but I think the market's looking to get as much as whatever price the market's willing to bear. And it's all hinging on expectations of whether or not we'll be able to swing through this with the stock market. All right, so that's the energy markets. We've got energies. The energy markets are soaring across the board. You've got crude oil over $100 a barrel again, currently trading at just under 101 for the April contract. That's up $1.72. The high was $101.15. You've got heating oil up over 3 cents. That's a $1,200 move in heating oil at $281.60. Gasoline's up 81 ticks. Now, natural gas, which by the way is the barometer. Most homes are, a lot of homes are heated throughout the Northeast with natural gas. Natural gas isn't doing the storm expectation, and it's actually negative on the day. So much for that rumor that they were spreading that's all up because of that. Meanwhile, in the metal markets are soaring, especially silver up 75 cents right now at $18.93 basis May. June gold is up over $12 at $957.80. Now, believe it or not, that's not its all-time high. It was actually higher last week. So you've got the metal markets up, the energy markets up, and the dollar down sharply. So it'd be pretty interesting to see what happens tomorrow. Anyway, this is Paul Britton from Las Vegas. Thank you guys for stopping by. See you later.
That was Paul Britton, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.